Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Get ready for a jam-packed economic calendar this week. We've got more Black Star events than we can fit onto one page. Starting with the Canadian inflation data on Tuesday, followed by the British inflation data and the US interest rate decision on Wednesday. On Thursday, we'll see the British interest rate accompanied by the US unemployment claims report, and rounding off the week on Friday, PMI data will be released from the Eurozone, Britain and the USA.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, markets showed cautious optimism after global authorities moved to stem contagion from a simmering banking crisis. The safe haven dollar is on the back foot and the yen tumbled amid a rebound in treasury yields. The risk-sensitive Australian dollar jumped to a 2-week high while the euro edged higher for a third straight day. Over the weekend, the Federal Reserve, European Central Bank, Bank of England, Swiss National Bank and the Bank of Canada, accompanied by the Bank of Japan, announced joint action to enhance market liquidity. That followed Swiss authorities' negotiation of a buyout of Credit Suisse by UBS, but at a huge discount and with a massive debt write-off. Now let's dive into our analysis for today on EUR/AUD. We're currently hovering just within that primary support level at 1.596. Should we break and close this level around that 1.5975 level, we could see this specific currency pair rally all the way to that next primary resistance at 1.612. Moving on to Wall Street. The actions taken last week by major US banks to save First Republic Bank calmed the markets. The S&P 500, Dow Jones and Nasdaq 100 all closed the week in positive territory, up 1%, 0.1% and 5.3% respectively. Now let's shift over and focus on Nasdaq 100's analysis. US tech is currently hovering below the primary resistance level of 12,700. Should we get a close around that 12,500 level, we could see this specific index fall all the way back down to retest those lower support levels at 12,300 or even lower at 12,200. Should we, however, break above the resistance level and close around that 12,700 level, we could see this index rally all the way to the next resistance level at 13,200. Moving on to commodities. WTI crude and Brent crude oil hit a multi-year low with one of its worst weeks this year. Oversupply concerns have continued to weigh down on oil prices, and the banking sector turmoil poses an additional threat to the global economy. Fears of a recession will continue to put a dent on oil demand outlook. Looking at our analysis on crude oil, we've broken that support at $68 a barrel. Should we close around that $66 a barrel level, we could see this specific commodity fall all the way back down to our next primary support at $62 a barrel. However, should we break above that support level again and close around that $68.7 a barrel level, we could see this go back up to retest that $72 a barrel level. Finally, gold prices closed last week on a strong note, up nearly 6.5%. Fears of a potential banking crisis and doubt over whether the Federal Reserve has enough room to keep rising interest rates have only boosted the non-interest yielding metals appeal. This trend will continue in the medium term. Our analysis on gold shows an incredibly bullish momentum on this specific commodity at the moment. During today's trade, we could potentially see this specific pair come back down to retest that support level at 1915. Should we, however, not come back down to those levels and we get a close around that 1990 level, we could see this commodity go all the way back up to that next resistance at 2020.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.